For the last couple of days, if you see, holding companies have been buzzing in trade. In fact, usually if you see, holding companies almost trade at a discount to their fair value or the net asset value. But what has happened right now is that Tata Investment has become the first holding company to trade at a premium to its net asset value or the value of its stake in the listed companies. Now, if you see Tata Investment's market capitalization, that stands at close to 22,700 crore rupees, as against the value of its stake in listed entities, which stands at close to 19,800 crore rupees, which means that Tata Investment's market capitalization is now at a premium of nearly 15%. Now, the other investment holding companies, if you see, listed holding companies, if you see, Bengal and Assam is trading at a discount of nearly 24%, which means that that company's market capitalization is trading at a 24% discount to its value of stake in the listed companies. Then there are other companies like Bajaj Holdings, Chola Holdings, ZID Perry, which are trading at a discount of nearly 50%. And then there are companies like Kalyani Investment, Bombay Burma, and Pilani Investments, which are trading at a discount of more than 80%. So usually holding companies trade at a discount of nearly 50 to 80%, but Tata Investment becomes the first holding company to trade now at a premium. Now, what is that one factor that is actually working in favor of these holding companies? Now, SEBI sometime back had introduced this voluntarily delisting norm paper, which is yet to be finalized, but it is still in the proposal stage. Now, what that paper proposed was that new delisting norms for investment holding companies. Now, the most important part in this norms was, other than the normal delisting of buying out public shareholders by giving them cash, here there is an option to give holding companies to give shares of the invested companies in proportion in which they own shares. Now, this seems a bit complicated. Just to simplify this, if you see RPSG Ventures, now this is the listed holding company of First Source Solution. Now, RPSG Venture has an equity base of close to 2.95 crore equity shares, and RPSG Ventures owns close to 37.4 crore shares in First Source. Now, simply if you divide 37.4 crore by 2.95 crore, you will get the ratio in which this holding company, that is RPSG Ventures, if chooses to delist RPSG Ventures, can give the public shareholders the number of shares in First Source Solutions. So, one share of RPSG Ventures, any investor having one share of RPSG Venture could get nearly 12.7 shares of First Source. Now, 12.7 might not happen, so 12 shares. So, for 12 shares, if you see, one share of RPSG Venture would cost you 635 rupees, and 12 shares of First Source would cost you around 2000 rupees. Now, will the promoter do this? Well, it's not a compulsion for the promoter to delist this company, but there's a proposal that promoter could choose going forward, that instead of cash, they could give shares of First Source, in this case, First Source, or in any other case, the other listed entity that is listed in the stock exchange. So, this is one proposal which has come out, which is yet to be finalized, but this is one of the reasons why holding companies have been buzzing in trade.
Absolutely, surely keeping an eye out on other holding companies. Thank you so much for that, Somit. But